Based on the historical data and forecast, Bitcoin shows a generally upward trend with significant volatility. The price has tested the resistance level of $92,500 multiple times, indicating strong selling pressure at that level. However, the forecast for the next week suggests a continued upward movement, potentially reaching $91,600. Considering the RSI values, the asset is currently within a neutral range, fluctuating between 42 and 54. This suggests that we can utilize a momentum-based strategy. Therefore, I recommend a combined strategy utilizing RSI and Bollinger Bands for optimal returns. We will enter a long position at $89,300, coinciding with the first day of the forecast. The stop loss will be set at $88,800, just below the recent low of the Bollinger Bands, to mitigate potential losses. The initial target price will be $90,500, aligning with the forecast price and a reasonable profit margin. If the price breaks through $90,500 and continues upward, we will adjust the target price to $91,600, based on the forecast. This combined strategy leverages both momentum and volatility indicators to maximize potential gains while minimizing risk. Based on the historical data and forecast, Ethereum demonstrates a clear upward trend, supported by the recent price surge to $3,120 and the forecasted prices continuing to climb towards $3,290. We will implement a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. Initially, we will wait for the RSI to reach an oversold level below 20, which hasn't occurred in the recent data but remains a possibility. If this condition isn't met, we'll consider a long position when the price touches the support level of $3,000. The stop loss will be set at $2,940, just below the recent price consolidation, and the initial target price will be $3,190, aligning with the forecast for January 9, 2026. Furthermore, we'll utilize the Bollinger Bands to refine our strategy. If the price breaks above the upper band, indicating strong momentum, we'll consider increasing our position and adjusting the target price to $3,220. Conversely, if the price falls to the lower band and the RSI confirms an oversold condition, we'll enter a long position at $2,750 with a stop loss at $2,700 and a target price of $3,000. This combined approach, prioritizing the upward trend and incorporating RSI and Bollinger Band signals, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, XRP shows a slight upward trend, bouncing between the support of $1.9 and the resistance of $2.2. The RSI values fluctuate between 36.4 and 56.3, indicating periods of both oversold and overbought conditions. The Bollinger Bands suggest that the price is currently approaching the lower band, which could signal a potential buying opportunity. Considering these factors, I recommend a combined strategy incorporating RSI and Bollinger Bands. We will implement a strategy that buys when the RSI is below 20 and the price touches the bottom of the Bollinger Bands, and sells when the RSI is above 80 or the price touches the top of the Bollinger Bands. Specifically, let's initiate a long position on January 9, 2026, when the forecast price is $2. The RSI on January 9, 2026, is predicted to be around 50, which is not in the oversold region, but the price is near the center of the Bollinger Bands. Therefore, we will place a stop-loss order at $1.88 to protect against a potential downside reversal. Our target price will be $2.2, aligning with the resistance level. If the RSI reaches 80 or the price hits $2.2, we will close the position to secure profits. This strategy aims to capitalize on the anticipated upward trend while mitigating risk through strategic stop-loss placement and profit-taking at key resistance levels. Based on the historical data and forecast, BNB shows a strong upward trend. The price has consistently tested the support level of $852 and bounced back. The RSI values have fluctuated but generally remained below 80, indicating that the asset is not currently overbought. The Bollinger Bands show that the price is nearing the lower band, suggesting a potential oversold condition. We will implement a strategy based on RSI and Bollinger Bands. The entry price will be $871, coinciding with the start of the forecast period and a point where the price is near the lower Bollinger Band. The stop loss will be set at $864, just above the recent high and below the center of the Bollinger Bands, to limit potential losses. The target price will be $902, aligning with the forecast high for the week and providing a substantial profit margin. To refine the strategy, we will use a combination of RSI and Bollinger Bands. When the RSI falls below 40 and the price touches the lower Bollinger Band, it signals a potential buying opportunity. We'll enter at $871, place a stop loss at $864, and set a target price of $902. This approach balances the potential for high returns with risk management, capitalizing on the upward trend while protecting against unexpected downturns. This portfolio is the most efficient because it combines the strengths of both technical indicators and forecast data to maximize returns while minimizing risks. Based on the historical data and forecast, Solana shows a clear upward trend. The price has been consolidating recently, but the forecast indicates a continued climb. The RSI consistently hovered below 80, indicating that the asset isn't overbought. The bottom of the Bollinger Bands has been consistently below the current price, suggesting a bullish momentum. Therefore, I recommend a long position strategy. Entry price should be $129. The stop loss should be set just below the support level at $127. The initial target price should be $135, aligning with the forecast for January 9, 2026. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI dips below 30, consider adding to the position at $125, with a stop loss at $123 and a target price of $131. Conversely, if the price touches the top of the Bollinger Bands, which is $139, consider taking partial profits and moving the stop loss to break even. This layered approach allows us to capitalize on the upward trend while mitigating risk and maximizing potential returns. The overall strategy is to maintain a long position, adjusting entry points and targets based on RSI and Bollinger Band signals, with a core target of $135 and a protective stop loss at $127. Based on the historical data and forecast, TRON shows a slight upward trend. The RSI values have been fluctuating between 45.1 and 60.0, indicating periods of both oversold and overbought conditions. The Bollinger Bands suggest that the price has been consolidating within a range. Given the forecast prices consistently above $0.289, I recommend a long position strategy. We will use a combined RSI and Bollinger Bands approach. Specifically, I suggest entering a long position at $0.289. The stop loss should be set at $0.285, just below the support level, to limit potential losses. The initial target price is $0.294, aligning with the forecast high for the week. If the price reaches $0.294, we can consider moving the stop loss to break even at $0.289 to protect profits. This strategy combines trend analysis, RSI signals, and Bollinger Band support to maximize potential returns while minimizing risk. Based on the historical data and forecast, Dogecoin shows a slight upward trend. The recent RSI values have been fluctuating between 32.0 and 58.9, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. Considering the forecast prices, which are consistently above the recent closing prices, I recommend a long position strategy focusing on short-term gains. We will use a combined strategy incorporating RSI and Bollinger Bands to maximize efficiency. The entry price will be $0.129, triggered when the RSI falls below 35, indicating an oversold condition. The stop loss will be set at $0.117, just below the bottom of the Bollinger Bands to protect against unexpected downward movements. The initial target price will be $0.137, aligning with the forecast price for January 9, 2026. If the price reaches $0.137, we will move the stop loss to the entry price of $0.129 to secure profits and minimize potential losses. A secondary target price will be $0.143, near the recent resistance level, to capture further gains if the upward momentum continues. This strategy aims to capitalize on the anticipated short-term upward trend while managing risk effectively. Based on the historical data and forecast, Cardano shows a mixed trend with periods of consolidation and upward movement. The RSI indicates oversold conditions on several days, particularly around December 30th and January 2nd, with readings below 30. The Bollinger Bands show that the price has been fluctuating within a range, with the lower band frequently tested. Considering this, I recommend a swing trading strategy focusing on capitalizing on short-term price swings. We will initiate a long position when the RSI dips below 20, aiming to capture the subsequent rebound. The entry price will be $0.334. To manage risk, the stop loss will be set just below the lower Bollinger Band at $0.32. The target price will be set near the resistance level of $0.388, providing a reasonable profit margin. For the forecast period, the price is expected to hover around $0.36 to $0.38, suggesting a potential for a short-term upward movement after the initial oversold condition. I suggest a second long position when the RSI is above 80, aiming to capture the subsequent rebound. The entry price will be $0.381. To manage risk, the stop loss will be set just below the lower Bollinger Band at $0.37. The target price will be set near the resistance level of $0.4, providing a reasonable profit margin. This combined strategy, utilizing both RSI and Bollinger Bands, offers a balanced approach to navigate the current market conditions and maximize potential returns. Based on the historical data and forecast, Bitcoin Cash demonstrates an overall upward trend, supported by consistently bouncing off the $567 support level and approaching the $621 resistance. The RSI fluctuates around 55, indicating neither extreme overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increasing volatility and potential for further price movement. Given the forecast for January 3, 2026, at $624, I recommend a long position. Entry price should be $620, with a stop loss set at $615 to mitigate potential downside risk. The initial target price is $640, aiming to capitalize on the forecasted upward momentum. To refine the strategy, I will incorporate the RSI and Bollinger Bands signals. If the RSI dips below 20, indicating an oversold condition, we could consider a long entry. Conversely, if the RSI exceeds 80, signaling an overbought condition, a short position might be warranted. Furthermore, if the price breaks above the upper Bollinger Band, it suggests continued upward momentum, reinforcing a long position. If the price touches the lower Bollinger Band, it signals a potential reversal, prompting a reassessment of the strategy. Combining these indicators with the forecast and support/resistance levels, the most efficient portfolio would prioritize long positions with a focus on the $620 to $640 range, adjusting stop loss and target prices based on real-time RSI and Bollinger Band signals. Based on the historical data and forecast, Wrapped Beacon ETH demonstrates a clear upward trend, supported by the consistently rising forecast prices from $33.50 to $35.90 over the next week. The RSI values, although fluctuating, generally show a positive momentum, especially with a recent surge to 59.3, indicating a strengthening bullish sentiment. Considering the support price of $3,260 and resistance at $3,600, I recommend a long position strategy. The entry price should be $3,350, utilizing the initial forecast price as a trigger. A stop loss should be set at $3,260, just below the established support level, to mitigate potential losses if the trend reverses. The target price should be $3,590, aligning with the highest forecast price and providing a substantial profit margin. To refine this strategy, we will incorporate the Bollinger Bands. The price consistently staying above the center band suggests an upward trend. The entry price of $3,350 is slightly above the center band, confirming the bullish momentum. The stop loss at $3,260 is well below the bottom band, providing a buffer against short-term volatility. The target price of $3,590 is near the top band, suggesting a potential resistance level. This combined RSI and Bollinger Band strategy offers a balanced approach, capitalizing on the upward trend while managing risk effectively. This portfolio is the most efficient strategy to achieve high returns. Based on the historical data and forecast, FLOKI shows a slight upward trend. The RSI has been fluctuating, recently crossing above 50, indicating increasing bullish momentum. The Bollinger Bands have been widening, suggesting increased volatility and potential price movement. Considering these factors, I recommend a long position strategy. We will enter a long position when the RSI reaches an oversold level of 20, which has not occurred in the recent past. However, given the current upward trend and the forecast predicting prices above the recent close, we can enter a long position at $0.0000438. The stop loss will be set just below the support level at $0.0000388 to protect against a potential downside reversal. The initial target price will be the upper Bollinger Band, $0.0000495. To refine this strategy, we will incorporate the Bollinger Bands. If the price touches the lower band, we will consider it an oversold signal and enter a long position at $0.0000384, with a stop loss at $0.0000364 and a target price at $0.0000495. Conversely, if the price touches the upper band, we will consider it an overbought signal and exit the position. This combined strategy, prioritizing the upward trend and utilizing the Bollinger Bands for dynamic entry and exit points, aims to maximize returns while managing risk effectively. The final portfolio will be a long position at $0.0000438, with a stop loss at $0.0000388 and a target price at $0.0000495. Based on the historical data and forecast, Cardano shows a mixed trend with periods of consolidation and upward movement. The RSI indicates oversold conditions on several days, particularly around December 30th and January 2nd, with readings below 30. The Bollinger Bands show that the price has been fluctuating within a range, with the lower band frequently tested. Considering this, I recommend a swing trading strategy focusing on capitalizing on short-term price swings. We will initiate a long position when the RSI dips below 20, aiming to capture the subsequent rebound. The entry price will be $0.334. To manage risk, the stop loss will be set just below the lower Bollinger Band at $0.32. The target price will be set near the resistance level of $0.388, providing a reasonable profit margin. For the forecast period, the price is expected to hover around $0.36 to $0.38, suggesting a potential for a short-term upward movement after the initial oversold condition. I suggest a second long position when the RSI is above 80, aiming to capture the subsequent rebound. The entry price will be $0.381. To manage risk, the stop loss will be set just below the lower Bollinger Band at $0.37. The target price will be set near the resistance level of $0.4, providing a reasonable profit margin. This combined strategy, utilizing both RSI and Bollinger Bands, offers a balanced approach to navigate the current market conditions and maximize potential returns. Based on the historical data and forecast, Aave shows a recent downtrend, but the RSI is consistently below 40, indicating oversold conditions. The forecast for the next week suggests a slight upward movement, with prices hovering around $151 to $157. Considering the support level at $164 and the recent oversold RSI, I recommend a long position. We will enter a long position at $151. The stop loss will be set just below the support level at $163 to protect against a further decline. The initial target price will be the recent resistance level at $188, aiming for a significant profit. To refine this strategy, we will incorporate the Bollinger Bands. The price is currently near the lower band, suggesting a potential bounce. If the price reaches $153, we will move the stop loss to $151 to lock in some profit and reduce risk. If the price reaches $177, we will set a second target price at $188. This multi-stage approach allows us to capitalize on potential upward momentum while managing risk effectively. This strategy combines oversold RSI signals, support and resistance levels, and Bollinger Bands to maximize potential returns while minimizing losses. Based on the historical data and forecast, Virtual's protocol shows a downtrend with significant volatility. The RSI consistently remains below 50, indicating a prevailing bearish sentiment. The Bollinger Bands are widening, suggesting increasing market uncertainty. Considering the support price of $0.71 and the forecast for the next week, I recommend a contrarian strategy focusing on short-term bounces. We will implement a strategy that combines RSI and Bollinger Bands. When the RSI dips below 35, indicating an oversold condition, we will enter a long position at $0.646. The stop loss will be set just below the support level at $0.63, and the initial target price will be the resistance level at $0.83. To refine the strategy, we'll incorporate Bollinger Bands. If the price touches the lower band, which occurred on January 2, 2026, at $0.635, it signals a potential bounce. We will enter a long position at $0.635. The stop loss will be set at $0.62, and the target price will be $0.71, aligning with the support level. Furthermore, if the forecast shows an upward trend, particularly if the price approaches the upper Bollinger Band, we will consider taking profits earlier. This combined approach leverages both momentum and volatility indicators to maximize potential gains while managing risk effectively. Based on the historical data and forecast, IOTA shows a slight upward trend. The RSI consistently hovers below 50, indicating a generally oversold condition, with a recent push above 50 towards the end of the period. The Bollinger Bands show that the price has been fluctuating within a defined range, recently approaching the upper band. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands. We will initiate a long position when the RSI dips below 30, confirming an oversold state. Specifically, we will enter a long position at $0.0874. Given the current RSI of 39.6 and the proximity to the upper Bollinger Band, a conservative stop loss will be set at $0.0787, just below the lower band. The initial target price will be $0.0956, aligning with the recent high and the upper Bollinger Band. If the price continues to rise, we will adjust the target price to $0.1, the resistance level. This strategy aims to capitalize on the anticipated upward trend while mitigating risk through strategic stop-loss placement. Based on the historical data and forecast, Dogecoin shows a slight upward trend. The recent RSI values have been fluctuating between 32.0 and 58.9, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. Considering the forecast prices, which are consistently above the recent closing prices, I recommend a long position strategy focusing on short-term gains. We will use a combined strategy incorporating RSI and Bollinger Bands to maximize efficiency. The entry price will be $0.129, triggered when the RSI falls below 35, indicating an oversold condition. The stop loss will be set at $0.117, just below the bottom of the Bollinger Bands to protect against unexpected downward movements. The initial target price will be $0.137, aligning with the forecast price for January 9, 2026. If the price reaches $0.137, we will move the stop loss to the entry price of $0.129 to secure profits and minimize potential losses. A secondary target price will be $0.143, near the recent resistance level, to capture further gains if the upward momentum continues. This strategy aims to capitalize on the anticipated short-term upward trend while managing risk effectively. Based on the historical data and forecast, Bonk shows a slight upward trend with increasing prices over the last 2 weeks. The RSI values fluctuating between 34.8 and 58.2 indicate periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation. The forecast for the next week projects continued upward movement, with prices expected to reach 0.000000910 to $0.0000910. Considering these factors, I recommend a long position strategy. My strategy is to enter a long position at $0.0000830, capitalizing on the current upward trend and the forecast for further price increases. A stop-loss order should be placed at $0.0000720, just below the bottom of the Bollinger Bands, to limit potential losses if the price reverses. The target price for this trade is set at $0.0000910, aligning with the support price and a reasonable profit target based on the observed price action. This strategy combines technical indicators and price forecasts to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Pudgy Penguins exhibits a generally upward trend, particularly noticeable in the recent days. The forecast for the next week indicates continued price increases, ranging from $0.00963 to $0.0106. The RSI consistently fluctuates but shows a recent climb, ending at 57.4, suggesting the asset is nearing overbought territory. The Bollinger Bands show the price moving towards the upper band, indicating bullish momentum. Considering these factors, I recommend a long position strategy with a focus on capitalizing on the predicted upward movement. My proposed strategy involves entering a long position at $0.00963. Given the proximity to the upper Bollinger Band and the rising RSI, a stop-loss should be placed just below the lower Bollinger Band at $0.00813 to mitigate potential losses if the trend reverses. A conservative target price can be set at $0.0106, aligning with the forecast high for the week and providing a reasonable profit margin. This strategy combines trend analysis, momentum indicators, and volatility bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, plasma demonstrates a clear upward trend. The price has consistently moved upward from 0.137 to a forecasted 0.201, breaking through the resistance price of 0.196. The RSI consistently rises, indicating strengthening momentum. The Bollinger Bands show the price nearing the upper band, suggesting continued upward potential. Therefore, I recommend a long position strategy. Entry price will be $0.175+, with a stop-loss set at $0.161+, to protect against a potential pullback. The initial target price will be $0.187+, aligning with the forecast and upper Bollinger Band. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. When the RSI dips below 35, it signals a potential oversold condition, and when it exceeds 55, it suggests an overbought scenario. We will adjust the target price based on the Bollinger Bands. If the price reaches the upper Bollinger Band, we will set a new target price of $0.193+. If the RSI reaches 80, we will consider taking partial profits and tightening the stop-loss to $0.171+. This dynamic approach aims to maximize returns while mitigating risk, capitalizing on the strong upward trend of plasma. Based on the historical data and forecast, Pepe shows a generally upward trend, supported by the increasing forecast prices from $0.0000490 to $0.0000610. The RSI consistently fluctuates, but the recent surge to 75.4 indicates an overbought condition, suggesting a potential pullback. The Bollinger Bands have been widening, indicating increased volatility. We will implement a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels. Our strategy will involve a buy position when the RSI falls below 30, coinciding with the lower Bollinger Band touching the support price of $0.0000460. Specifically, we will enter a long position at $0.0000460 plus $0.01. The stop-loss will be set just below the support level at $0.0000450 plus $0.01, and the initial target price will be the resistance level of $0.0000660 plus $0.01. As the price moves favorably, we will adjust the stop-loss to break even to protect profits. If the price reaches the target, we will take partial profits and move the stop loss to ensure continued gains. This approach balances risk and reward, capitalizing on potential upward momentum while mitigating downside risk.